Okay, today I'm going to share most important strategy, most important thing with you. As I have mentioned in my previous videos, that price always changes with time. See, price action does not have value in itself. Price never changes if the time does not change. The golden rule is price pattern or price action always changes with time. If time does not change, price pattern or price action does not change. Price action remains constant. So we need to focus on time. When the time changes, if we can understand when the time change, we can understand when the price is going to change. Then deciding the direction of price or deciding the direction of market is a simple and easy task after you identify the important timings. Now, after you get timings from me, uh, after you get important daily trading timings from me in advance, what you need to do is plot them on the chart in advance and set up an alarm just before the 5 minutes. For example, see today on 17th of December 2024, one important timing came up using my time analysis formula. The timing was 10:35. I'm using 5 minutes candle. The timing was 10:35. What I do regularly is I set an alarm for 10:30. If the timing is 10:35, I set an alarm for 10:30. For 5 minutes, I observe the market and then I decide what trade should I take, what direction market is going to go probably, and what are my options, what should I do, and then I take the trade at the right moment, right time. So okay, now timings are plotted on the chart. What should we do then? What indicator should we use? See, most of people use RSI or MACD or moving averages and complex trading equipments or complex trading tools. I don't go into that. What I do is, see, this is TradingView standard platform. I'm not using any other platform. This is TradingView standard platform. 5 minutes candle. I click on the indicator and strategies and go for advanced decline ratio. In brackets there is written bars. This is most important thing. You don't go for advanced decline line, you don't go for advanced decline ratio, you go for advanced slash decline ratio bars. See, this indicator is important. I go into settings and the length, I change standard length, it is mentioned is 9, I change it to 10. I'm just making it thicker so that you can understand. Yes, let's make it other color so you can understand from vertical timelines we have plotted. Okay, so this is the advanced decline ratio bars indicator. This simply gives us what direction should we expect from the market and how we use it with time cycle is, see, remember this golden rule. The behavior of indicator in previous time cycle is always followed by price in coming time cycle. Keep in mind what I'm saying. Take a note. Indicators behavior in previous time cycle is followed by price action in next time cycle. That means, see, this is the time cycle of yesterday, last time cycle of 16th December 2024. The last timing was 14:45. That means 2:45 p.m. in the afternoon. That was the last timing given for 16th December. From 14:45 to today's morning, we consider it one time cycle. Actually, there are multiple time cycles in between, but market closes at 15:30. So we consider it time cycle. We consider it one time cycle. So let's understand what's happening here. See, at the opening of 14:45. Why 14:45? Timing was given 14:45, and I choose the timing at the opening price, not closing price. This is the most important thing. So 14:45, you can see the value of advance decline ratio. If I put my cursor, put my marker on 14:45 on 16th December 2024, the value of advance decline ratio is 1.50. And at the end of the day, or starting of next time cycle, the advance decline ratio came to 0.43. See, so indicator line declined, indicator line came down. So indicator showed us the golden rule. What in a golden rule shows us is, as indicator line decreases, price follows the lead in next time cycle. That means advance decline ratio showed that market is going to go down. Price went down. Okay. Then what happened? In the next time cycle, see, at 9:15 on 17th December, that means the opening of market, advance decline ratio was 0.43, and around the start of next time cycle, 10:35, advance decline ratio went up to 0.67. That means indicator went up. See, also price went up. Okay, then what happened? At 10:35, advance decline ratio was 0.67, and starting of the next time cycle at 11:10, ADR, advance decline ratio, was 1.00. That means it slightly went up. Always remember, there is a risk in a market. It is not always 100% accurate. No strategy is going to give you 100% accurate results. What I do is, I always choose 20-point stop loss and 40-point target, and I trade with two levels out of the money strike price. That means, let's see, at the opening of market, the opening price was 24,607. Round figure was 24,600. If I'm going to choose put option, I'm going to choose 24,500 put option on weekly expiry. Okay. If I'm going to choose for call option and market is 24,600, I'm going to choose 24,700 call option. That is two level out of the money. One level is 50 rupees for Nifty and two level is 100 rupees. If you are going for bank nifty, two level means one level is for 100 rupees. So you need to understand what two level, three level means. I'm assuming you are professional in market. That means you know what is one level out of the money, two level out of the money. Why strike price? I'm sharing my strategy with strike prices because the stop loss you're going to choose depends on the strike price you choose. Because if you're going to choose in the money option or at the money option, you need much bigger stop loss. That means if you're going to choose at the money option, you will need 50 points stop loss. If you're going to choose in the money options, you will need 50 to 60 points stop loss. If you're going to choose one or two level out of the money options, you will need 20 points stop loss. That is sufficient. 20 points stop loss is sufficient for one or two level out of the money. I insist you do not go three level out of the money, beyond three level out of the money. You keep your trade between three level in the money to three level out of the money. Don't go beyond three levels, uh, any side, call or put, in the money, out of the money. Don't go beyond the range of three level out of the money for weekly expiry. If you are going for monthly expiry and not um, it is not considered for last week. If you are at the starting of the month or in the mid of the month, and if you are going to choose monthly expiry, then you can go maximum five level in the money or out of the money. In case of monthly expiry, and if you are going to choose in the money or in the money expiry, in the money strike price, you need stop loss of 80 points. In that case, you are going to go for 150 points or 160 points target. Risk to reward ratio is always 1:2. Uh, I'm I'm putting it in perspective of Nifty. If you are going for Bank Nifty, you can manage it because the Bank Nifty's stop loss or target is going to always going to be always two or three times of that of Nifty. If you are going for mid cap Nifty, 10 points stop loss is sufficient. In that case, 20 points target. Fin Nifty and Nifty goes hand in hand because 20 points stop loss for both of them and 40 points target for both of them, because their spot price is more or less equal. So coming back to our chart, uh, let's see at 10:35, the ADR, advanced decline ratio, was 0.67, and at the start of next time cycle 11:10, ADR went up to 1. So spot price at 11:10 was 24,491, and it went down. It hit our stop loss. It went down up to 24,361. So I think 130 points market fall we witnessed here. Okay, then what happened? At the start of 11:10, ADR was 1.0. At the start of 12:30, ADR was 1.0. So it remains same, and the behavior you can observe, indicator went down and then went up. Price followed the same path. Price went down and then up in the next time cycle. Most of the times you will observe this exact same thing. Indicators behavior in previous time cycle will be followed more or less in the next time cycle by the price. See again, in the next time cycle, indicator ADR went from 1.0, it went down, again went up to 1.0. Actually here you can witness market went down significantly and then retrieved a little small amount, not much. There was a lost opportunity because in our assumption we are not going to take trade here because indicator remained at the same price, at the same price as opening of the time cycle. So opening of the time cycle ADR was 1, closing of the time cycle ADR was 1. So we are not going to take any trade at the time. So market went down, then indicator fluctuated from 1300, that means 1 p.m. to 1 and 50, 1350. So 1300 to 1350 indicator ADR fluctuated and remained constant. See, you can witness the fluctuation in price action here. It did not give much of the room for any trade because at the opening of 1350 time cycle, the opening price was 24,364, and at the closing of that time cycle it went down to 24,330. So just 35 points of movement. In options perspective it did not matter much. This first cycle of the day and the third cycle of the day were much more significant, but this time pattern did not give much room for any trade to go into profit. In this time cycle, 1350 to 1450, we observed market indicator went flat and then showed fluctuations. Up and downs were more violent. We can witness the same thing happened in the last time cycle of the day. So again, I'm going to tell you the golden rule. Indicators behavior in previous time cycle is going to be followed by price action in the next time cycle. This is the golden rule. Of course, you're not supposed to take it the Brahma Vakyam. See, with indicator, you should always remember this. You should always uh, take support of open interest of weekly expiry. Again, in case of Nifty, I'm saying weekly expiries, weekly option chains put call ratio is always, we can say, it works as lighthouse. It always gives us guidance that if what we are doing is good enough or not, what indicator showing us is valid enough or not. So when you look at advanced decline ratio, always cross check it with weekly expiries open interest. uh, I generally use a platform of Upstocks, but if you have another platform like Zerodha or let's say Dhan or Grow or Angel One or any platform you can use, most of the platforms show weekly expiries, weekly candles, weekly option chains, put call ratio. So if the put call ratio is going down, there is no business of ours to take trade in call side. See, and if the put call ratio is going up, then there is no business of ours to take trade in put side. So always follow this. Open interest also there is a, again, open interest also does not give you full picture. If you use advanced decline ratio, open interest with time cycle, you will find much more interesting and promising trades. Because look at here, at 10:35 to 11:10, at the 10:35 market was, I mean Nifty spot price was 24 2413 and it went up to 24,500. That means it was actually 80%, sorry, 80 points movement. It will give you at least 30 points movement easily, no problem. Let me show you how. 24,413. If we choose Nifty weekly expiry, 24,500 call from 10:30, 10:35, it was 130, around 130. If you could manage to buy it around 130, your stop loss was 110. At 10:45, it went up, down to 119. Stop loss did not hit, and your target was, I think, 170. Yes, 170, 40 points. It went up to 163. As soon as the price goes up 20%, you move your stop loss 20 points up. I'm using percent words, word, I don't know why. Uh, as soon as you see the price goes up 20 points, you adjust your stop loss by 20 points and you trail stop loss with 20 points gap between current market price and your stop loss. At here, I guess you could get 10 points of profit, or I don't know, but at least you didn't make any loss at 10:35 trade. You took trade at 130 and most probably you got exited at I don't know, 130 at buying price. But again, it was not a bad deal, uh, because as you can witness here at 10:35, uh, the open interest, sorry, the put call ratio, we have witnessed as it went down. Again, you need mastery over open interest. If you don't know how to interpret open interest, and at 0.60, uh, I always hold myself back, because I don't know if there are any reversal or continual of a previous trend. But with put call ratio and advanced decline ratio, it gives you very fantastic idea what to expect from the market. uh, Again, for the next time cycle, from 10:35 to 11:10, let's understand what is happening at put call ratio level. See, put call ratio at of weekly option chain, put call ratio was 0.589, and at 11:10, what happened? 11:10, 11:09, it it went slightly up to 0.5915. Actually, it did not matter that much. Um, it uh, it went relevantly flat. That means put call ratio told us that we cannot expect much from the market in the coming cycle. Actually, it was not that great suggestion from put call ratio too, but we can understand that majority of the day's market fall was witnessed in first time cycle. So next indications from any put call ratio or any indicator was going to be confusing. But still, uh, let's understand what happened at first time cycle. The opening of 24,607, we were going to take trade for Nifty 24,500 put. Sorry, I chose the wrong one. Current week expiry 24,500. See, at the opening of first time cycle, that means 1915, the opening was at 100 rupees. Let's say you managed to take it around 105, because first transaction of the day is not going to be yours always. Let's assume you took it around 105 and the stop loss was at 85. Stop loss, actually market went down to 95, never went to your stop loss 85, and you witnessed it to 214 or 205. Let's assume at 13 at 10:35 you exited the trade, but from 105 to 205, 100 points rally you managed to capture. See, without time cycle, it was impossible for you to judge that actually price is going to reverse. Any other indicator you have used, even only put call ratio you would have followed without time cycle, it would have give you very different um, understanding of the market, and you would not have managed to exit at 100 points or at uh, around the top of that time cycle. You can see that market did not go up that much after 205. There was a spike around 226, but it did not sustain. Most of the times market went up to and sustained to 2010 to 215. That's it. That was the ceiling of today's market. The closing of the candle you witnessed at 1425, that was 230. That was the ceiling of today's market at the strike price of 24,500. But 90% of entire day's rally, 90% of the entire day's rally, you managed to catch it in first time cycle. You could have stayed away from the market after every other after taking 100 points of profit for every other cycle. You earn one profit and you could have decided, that's it, I'm done. That would be best choice for you. No necessary for taking each and every trade. But what I'm trying to say is, if you had not engaged in market after 10:35, market did not do any much better. It stayed in that territory. It did not do more anything after that. It just went into fluctuation. See, that's how time cycle works. That's how it is important with any indicator. You can choose. Indicator can be your choice. I am just giving you what I feel the best possible strategy that fits with time cycle. If you find any other indicator that functions better with time cycle, just message me, just suggest me. I will backtest that indicator. I will make it into better strategy, and I will make sure you get better results. But one thing I can promise is, with time cycle everything is better. Without time cycle everything is just fussy, and you have no idea what's going to happen. Okay. So and one more thing, if you want this same video in Hindi, just message me. I'm going to make this video in Hindi also. For those who don't who are not comfortable with English and understand Hindi better, or they feel that they can um, understand, yes, they can understand Hindi better, and they can learn in Hindi better, just message me that you want this video in Hindi. I will make sure in next 1 to 2 days to make this video in Hindi. Thank you very much. Again, trade with this is my tagline: trade with confidence, live with freedom.